If you are a beginning commercial real estate investor, how do you get the best deals from the commercial real estate brokers? And how do you beat the more experienced investors that the brokers have access to? And why would a broker even give you the deal since you are a beginner? Well, that's what today's video is about. We have a student with no experience, and he just acquired 16 units in a Seattle suburb that I consider one of the hottest in the nation, and he just closed on a great value add deal. And let me explain that real quick. A value add deal is where you can increase the value or force the equity upward on the commercial property. He's going to do this by increasing the rents. There's a $75 increase in rents that he can do immediately. We also found a vacant closet where he's going to install a washer dryer hookup, and the unit will demand an additional $75 per month. Now that is a $150 increase. Let's do the math. $150 per month times 16 units, that's about $28,000 per year of additional income. That equals, in a 5 to 6 cap market, that equals about a $500,000 increase in value. It's a great deal, right? Well, his offer was not the highest offer. He was not the highest bidder. He had no track record, right? Yet his offer was accepted. He beat the more experienced investors. How did he do that? Well, let me walk you through that right now. Let's get started. Hello everyone, I'm Peter Harris with Commercial Property Advisors. I am the author of my best-selling book, Commercial Real Estate Investing for Dummies. I also have my new bestseller, Commercial Real Estate for Beginners. Now, we also have the #1 rated YouTube channel on commercial real estate investing, and that's because of you, so thank you very much. I also coach and mentor many people around this great country of ours. So thank you so much for joining us. Today we're going to go over how you, if you are a beginning commercial real estate investor, can beat the more experienced commercial real estate investors. Now, here's what our student did. I'm going to give you 3 tips. #1, our student learned how to speak the language. What's the language? Well, there are 2 languages in the real estate world. There's the broker language, or the apartment language, or the commercial language. That's one language. Or you have the single family rental language. That is a no-no. All right, so I'm going to cross that out. If you want to be taken seriously as a beginner, as a beginning commercial real estate investor, you cannot use any type of single family rental, single family investment language. You must learn the broker language. They do speak a certain language. You must learn the apartment language. What I mean by that is you need to learn the terms of the cap rate, cash and cash return, price per unit, NOI, etc., right? Because it helps build immediate credibility with the broker. Immediate, right? If you want to be taken seriously, you have to learn these terms. I do have a video on these 7 really important terms. It's called the 7 commercial real estate terms you should know. A link will appear on this video and after the video so you can go there directly and learn the language. All right? Now, that was step 1 of our student did. So he studied the terms, and then he learned the language, and that allowed him to defeat what I call beginneritis, right? Where you're a beginner and you want to be taken seriously, you lack confidence, but if you study and you learn these terms and you apply it by speaking to brokers, you will build credibility and you will be taken seriously, and it's the first step in beating the more experienced investors. Let's go to tip #2. Here is tip #2. Our student had the money, i.e. the down payment. Now, all of the money for the down payment does not need to be immediately available. For some of you, that's a mental block. You fear that you need to have all your ducks in a row before you call the agent or make the offer. That's not true at all. So that's a mental block for you. Get over it, right? You don't. Our student did not have all of the money available, but he had it available in various places, all right? So get over that if that's a mental block for you. So tip number 2 is our student had the money available, and that's what got him to second base on the deal, right? Now, I want to share with you how commercial brokers' minds work, right? On the initial phone call, going through their minds and even asking you where is a down payment coming from. This is a way for them to filter you out. Are you a person with no money? Are you a person that's broke? Right? Are you a person that's going to waste his time? So depending how you answer this question is going to dictate how much time or how many deals they send to you. So we instructed our students to tell him up front what he had available. And he had enough available through various means to complete the down payment. That's all he needed to tell the broker, and the broker never brought it up again. All right? Now, when you have money available, it evens out the playing field if you are a beginner. And when I mean available, it could be cash, it could be savings, it could be retirement accounts, it could even be through other investors, right? So you add all this up, and I'm sure some of you can come up with hundreds of thousands of dollars available for your deal that you didn't think you'd had before. All right, so to be taken more serious and to beat out more experienced investors, you at least need to have tip number 2 going, have the money. Let's go tip number 3. Here's tip number 3, play to win. Don't play to lose, play to win. Let me read to you a quote from one of my favorite books from the author Sun Tzu. The book is called The Art of War. He says, knowing the enemy enables you to take the offensive. Knowing yourself enables you to stand on the defensive. What does that mean? That means that if you're going to play to win, you need to know your stuff. You need to do your market research. That's extensive. You need to have a great plan. And as coaches and mentors in our company, that's what we do for our clients. So we're able to put our student in that position, right? Playing to win. Here are 3 things that we did that helped us win the deal, to beat out the competition. Our offer was slightly higher than asking. So was everyone else's. In order to throw our hat in the ring to be considered serious, we had to do that. And I'll tell you why we're able or wanted to do that. Secondly, we use their in-house lender. So this in-house lender is the same guy, it's the guy who sits next to the listing broker. We wanted them to communicate of how well qualified our student was to help us win the deal. Number 3 was we kept the inspection period in the contract to 21 days. So we had 21 days to do all of our due diligence, all of our financing, right? So we'll be committed to this deal after 21 days. We can either back out, or if we accept the deal in 21 days, our earnest money becomes non-refundable. Our competition had 30-day inspection periods and 40-day inspection periods. We're at 21 days because we are so confident in the deal. Now, why were we so confident, you ask? Well, we were confident because we knew there was a rent income upside. As I mentioned a few minutes ago, there's a $150 upside in the deal, which equates to almost a $500,000 in forced equity in the deal. So that's why we were able to offer slightly higher than the asking price, right? Because we knew that because we know our stuff. Secondly, there were 2 identical properties behind this property, and I don't think anyone knew because no one ever brought it up. We found out during our research. So the potential is not 16 but 48 units down the road. So as I'm recording this video, the student is contacting those other owners. Thirdly, their property is in a suburb of Seattle with a 30-minute commute time from that city to downtown Seattle. That's a great area. As you know, it's one of the hottest multifamily markets in the nation. That city had a 15% population growth since 2010, and there's a community college and 2 elementary schools within walking distance. What's not to like about this deal, right? So that's why we were able to be so aggressive and play to win. Got it? All right, so I just shared with you 3 tips as a beginning commercial real estate investor to beat the more experienced investors. Number 1, you have to learn the language, right? Number 2, have the money. And number 3, play to win. All right. Okay, everyone. Thank you for watching this video. If you want more videos like this, please go onto our website, commercialpropertyadvisors.com, or simply subscribe to this YouTube channel. Thank you very much, and I'll see you at the next video.